With what some might consider a desperate attempt to get in on some of the zeal surrounding the opening of Epic Universe at Universal Studios in Orlando, Florida, something that promises to bring lots of money to Comcast over the next several decades, the Walt Disney Company yesterday announced a $60 billion CapEx plan for the next 10 years. But, well,
it did not have the effect that Longshanks planned.
Yeesh. And we're going to tell you why we think that happened right now. Renegade Online. Well, folks, welcome back. Another great day here at Valiant Renegade. It's good to see everybody out there once again. And if you are like one of the many folks watching this video, not yet subscribed to this channel, please take a moment and turn that little red subscribe button to gray. Hit that like button, hit that notification bell, share this sucker out on the social medias, and of course, please do leave a comment before you head out the door today. So from Barron's magazine, Disney to nearly double investment in its parks business. The stock is falling, however. Disney said in a filing with the SEC Tuesday that it plans to accelerate and expand the investment in its Disney Parks Experiences and Products, or DPEP segment, over the course of about 10 years to $60 billion. This would include CapEx in its theme parks and cruise lines, the company said. CapEx is a term that you're going to hear quite frequently in the financial realm, and what it simply means is the money that a company is going to convert into assets, be they real property or perhaps intellectual property. In the case of Disney, CapEx is the money that the company will spend to create things like a new ride at a theme park, a new theme park itself, a new hotel or resort, maybe create a new product line, or in the case that we know most frequently, what Disney will use to create things like Marvel movies, Star Wars movies, or TV shows for Disney Plus. But in this case, the CapEx spend that Disney is talking about in this latest SEC filing is specifically related to real property, boosting the theme parks and resorts division, but more specifically, there's an issue here. Bob Iger remarked, "We're incredibly mindful of the financial underpinning of the company, the need to continue to grow in terms of the bottom line, the need to invest wisely so that we're increasing the returns on invested capital, and the need to maintain a balance sheet for a variety of reasons. The company is also able to absorb those costs and continue to grow the bottom line and look expansively at how we return value and capital to our shareholders." Disney sees significant room for land and sea expansion, the company said Tuesday. Disney Parks alone has more than 1,000 acres of land available for possible development. For its cruises, the plans to nearly double the worldwide capacity of its line, adding 2 ships in fiscal year 2025 and another in 2026. So why then did Disney stock drop over 3.5% on a day when the broader market was only down a small fraction of that? You would think that sort of news would bring a lot of exuberance out there, but it didn't, and here's why we think that is. Here's the actual 8K SEC filing from Tuesday. Let's look through some of Disney's presentations. Now, the first thing Disney does, of course, is to tout the growth in the segment revenue for Disney Parks Experiences and Products over the last several years. Certainly, the growth has historically been there, but what the market is usually concerned about is what is that going to look like going forward, more so than what it's looked like up to this point. And what this slide is trying to get across, you can see in the upper right corner, aggregate investment increased 3 times, operating income increased 4 times. So what Disney is trying to do is give everybody a bit of a warm and fuzzy feeling there, saying, look, over the last several years, we have increased our CapEx on these types of things by 3x over the previous 10-year period, or so they seem to suggest, and the operating income for that segment has increased by a factor of 4. Sounds like a good return, right? Well, again, this is all about the future, not about the past. And in Disney's own words, they think that future is going to be turbocharged here, according to their SEC filing, with global CapEx over the next 10 years almost doubling, again, to $60 billion versus $30 billion. But that, of course, is still a gamble. And the Walt Disney Company is arguably in a very different financial position today in 2023 than they were in 2013. In 2013, Disney hadn't even had a thought in their head about dropping over $70 billion on Fox. 1,000 plus acres of land for possible future development. Wait, for possible future development. And And the map, as you would expect, is spread across the globe, from Disneyland in California, Walt Disney World in Orlando, Disneyland Paris, Disneyland Hong Kong, Disneyland in Shanghai, and Tokyo Disney. And then you've got down there in New Zealand and Australia, Disney Cruise Lines. Now, the next thing they talk about is that for every one park guest today that's attending, there are 10 plus other possible Disney customers who do not yet visit the parks. And those circles represent the population capacity. Look at North America and look at Asia when it comes to that footprint in terms of possible guest visits they haven't gotten yet from people who haven't gone there. Asia is the biggest thing on that map. And, well, as you would expect, guess where Disney seems to think a lot of this $60 billion in new CapEx is going to go? One of the shining spots at Disney we've talked about frequently is the cruise lines, and that has done tremendously well as time has gone on. But the reality is the overall revenues and operating income and profitability for the company as a whole is a very small piece of it, and it's not likely to be anytime soon that Disney Cruise Lines is going to contribute a significant portion of Disney's revenue and or profitability. Disney Vacation Club is the Walt Disney Company's timeshares. These private resorts are all over most of their theme park installments around the globe. Disney touts the margins that they have on these things, and as we go through the next slides, you can see what they're really planning on. Fort Wilderness Cabins, Polynesian Villas, and the Villas Disneyland Hotel in California. The curious thing is, all three of those are slated to open, according to the presentation, within about a year from now. So where's the rest of it? This is a $60 billion CapEx plan for the next 10 years, and all we're seeing is a glimpse into the next 12 months. I don't think Disney knows where they're spending the $60 billion yet either. Then we come to Disney's international parks. Guest spending in international parks, Disney says, up 69% per capita in the last 5 years. And what's the first one they tout out of that international park register? Well, it's Shanghai Disney of all of them. Attendance rebound, record revenue, operating income, and margins in 2023. And that, according to Disney, was the highest year-over-year growth rate. But of course, last year, Shanghai parks were largely shut down due to that thing. Then they tout the new New York hotel at Disneyland Paris. And again, in Disneyland Paris, record per capita spending by their guests. And that's it, folks. $60 billion in CapEx, and what I just showed you is all there is. It's a list of projects that have already been well underway, projects that have already been completed, and basically a bunch of statistics showing how well certain international parks are doing. There's nothing on this chart about what Disney is actually planning to do for the next 10 years with this $60 billion. As I said before, you have to wonder, does Disney even know? But seemingly no real talks of anything significant in Disneyland in California, and especially Disney World in Orlando, Florida. Well, that park in Orlando, Florida is the one that drives the bulk of the sales when it comes to profitability for Disney parks and experiences. That's the big one. That's the one with the largest footprint. And Disney seems to content to just leave that one be, at least according to this report. Now, that doesn't mean they don't have any serious expansion plans in Orlando, but it's just curious to me, why not mention them? Part of that may certainly be due to the fact that Disney has put itself in a no-win scenario in the state of Florida and with Governor Ron DeSantis, something that day after day doesn't seem to be going in Disney's favor. But the real question with their presentation is, where's the actual park expansions? You're talking about adding new timeshare units. You're talking about adding more hotel rooms, but what are we actually adding to the parks part of it? What are we adding to the actual attraction side of things? The things that get people to want to go to the parks to begin with. There seems to be virtually nothing there. Meanwhile, Universal Studios is doing this. A massive new theme park in Orlando, Florida that's going to increase capacity at Universal Studios down there enormously. Not to mention the intellectual property that's going into this park, namely Super Nintendo World, when you're going to have a Mario Kart ride and potentially things like The Legend of Zelda. Down the road, maybe even stuff like Metroid. You're talking about IPs that are huge across a multi-generational line. And while Universal Studios is innovating and bringing in new things, Disney is stagnating and looking back to the old. Disney's current spate of properties just aren't ringing the bell anymore. Marvel is not what it once was. Star Wars certainly is not what it once was. Disney's $2 billion in CapEx to build 2 Galaxy's Edge theme parks and a failed hotel obviously didn't go the way that Disney had hoped. And of course, all of this is coming to a head at a time shortly after it was noticed that Disney theme park attendance wasn't all that great this past summer of 2023. So will adding a bunch of hotel rooms around the area really improve attendance? Do people go to the parks to stay at the resorts and the hotels? Maybe some do, but most of them are actually there to enjoy the parks themselves. Now, this might work on the international side, but I can't imagine $60 billion being spent largely overseas. But the big concern for analysts that had an impact on stock price, in my mind, was probably the fact that they're looking at Disney's future and wondering, where is all of that wonderful cash flow going to go from linear broadcasting, which has been on a decline? Meanwhile, Disney's streaming services are still deep in the red, and Disney is now committing to spending $60 billion in CapEx over the next 10 years. Where might that come from? What impact could that have on Disney's overall bottom line, while their second major component of their business, television, is going by the wayside? I think it would have been wise for Disney to try to address some of that in that SEC filing to allay some fears of some of these investors, but they didn't. And as a general rule of thumb, it makes people nervous when you're talking about spending gobs and gobs of more money over the next 10 years, when those same folks are concerned about whether the money you have coming in now will still be there in 5. An even better idea would have been to tell investors where they plan to spend this money exactly and how. Is it really just going to be cruise ships and hotels? Again, how does that drive people to attend the hotels? The hotels alone are not the attraction. The parks are. If they're not going to spend lots of money adding in new parks and new attractions, then the hotels are for naught. But let me know your thoughts in the comments below. Is this the right move for Disney, or does this seem like a desperate attempt? There wasn't a lot of meat on the bones in this SEC filing talking about hotels and timeshares. Where's the parks? Where's the big stuff? How about opening a new park with a bunch of big roller coasters, kind of like Universal has, that draws in that older crowd or those more thrill ride enthusiasts? Disney doesn't really have anything of that nature. They could easily build something like that in Florida. But maybe they don't want to, out of spite for Ron DeSantis. Let me know your thoughts. Hit that like and subscribe. And until next time, take care.